What's going on, y'all? Hey, welcome to Money is Math, where we're going to teach you the formula, right? My name is Joe. I'm a financial coach, and I'm going to teach you these items right here. This is how you really create the Money is Math formula. You need your personal budget. You need to automate your money. You need to have an investment account, and then you need to make sure you have strategies for building a wealth fund. So I'm going to jump into this. I'm not going to take a lot of your time, but I'm super excited to be dropping this information to you, okay? So let's go ahead and get started. There's three things we're gonna teach you right now that you really need to get control of your money, all right? And it's your personal budget, all right? Once you can understand where your money is at and what you are doing with it, because most of us are afraid of our money because we don't know what our money is doing. And most of the time, if your money is unemployed, then it's not working correctly for you. So it's time to tighten it up to figure out where every dollar is at and what it's doing. Next, you want to learn how to automate your money. And this is the very easy part right here. All right. Because once you can automate it, then you no longer have to think about it. That way, you're able to use your other skills and your time to implement new ideas or to learn something new. And then we're going to show you some investments that you can get started with right now that can allow you to continue to grow your money overall. Okay, so let's go ahead and get that hard part knocked out. That is your personal budget. What do I mean by your personal budget? So we're going to break down everything by monthly expenses. This is where we're going to start at monthly, then we're going to grow quarterly, and then we're going to go annually. But once you can know your monthly expenses, that means how much money is coming out of your bank account each and every month, because most people get paid either bi-weekly or monthly, or you can probably get a commission check in a spare time, in an amount of time. But you want to make sure you break whatever you get into monthly expenses. So say you get paid once a year and you get paid $1,200, then that means you made $100 each and every month, or something costs $100 each and every month. That equals 1,200. Next, you want to figure out all of your liabilities. That is anything that has a payoff date. All right. So expenses is anything that's a reoccurring payment. Liabilities is anything that has a payoff date. Once you can figure out your liabilities, then we can know how we're gonna become debt free. Usually when they say somebody's debt free, it is because they have no liabilities. All right. Next, we're going to get that cash flow. We want to figure out how much cash flow you have left over after all your monthly expenses and your liabilities are paid for, because the cash flow is what's going to help build up your wealth. But cash flow is also how you live your best life. That's how you go on those vacations. That's how you go and do all of this entertainment, buying items and everything is with that cash flow. All right. And then we're going to help establish a money goal, because the reason for the money goal is financial peace is when you have enough money coming in that you no longer have to worry about your expenses. So when you have that money goal and you have enough money coming in, that means you have a lucrative cash flow. Afterwards, you are done. You have financial peace because you have a lot of cash flow. But there's two ways you can really make money. There's making money through wages, and then there's making money through profits. Wages is what you earn from a task you complete. All right? So let's break that down. Wages is what you earn from a task that you complete. Usually a 9 to 5 is you trade time for dollars. If you're providing some kind of service, you provide the service and you get commission. That is wages. What we want to get is profits. Profits is what you earn from investments. It's money that is passive. You don't really have to do too much. So that's why we get that money goal that's earning enough profits, that's taking care of our cash flow, which is covering all our liabilities and monthly expenses. That way we have financial peace. So that is the money is math formula. Now I'm going to break it down for you even more. Watch this. All right. We're going to break everything up into percentages. Let's just start there. We're going to break it up into percentages. And I know this might be a little small. If you need to pause the video, zoom in, you can. But I want you to listen to my voice right here, because this is very important. So we're going to start off with the very beginner level of just breaking things up. I want 70% of your money to go to personal, and then 30% to go to your wealth creation fund. What do I mean? Every single dollar you get, 70 cents of it will go to your personal, expenses, 30 cents of it will go to your wealth creation. So this is the beginning part of allowing your money to automate. All right. Once you know where all your money is at, now we're going to start automating. So you'll go to, if you work in a 9 to 5, this is perfect. You'll get two separate bank accounts. You'll tell your job, hey, I want 70% of my check to go to this account, and I want 30% of my check to go to this account. All right. Because we don't want no dollar to be unemployed. We want every dollar broken down like this. All right. So we're on step number 3 right now on there that says source of income. So you get your source of income, and then your source of income will be broken into those two different categories. We're going to start on the left first with your personal budget. Over there, you see you have your expenses and your liabilities. So with your expenses, we want that monthly amount, all right? Then we can later on break it to quarterly and annually, but you want that monthly amount because that is important. For your liabilities, I want you to have your total amount. So, what's an example of liabilities? Perfect liability is your car. Say your car costs $20,000. That is the total amount. That is the amount you're trying to pay off in the end. The minimum payment is $200. All right, so that means every month you're paying $200 to knock down that total amount. But don't forget about that great thing called interest. All right, interest is a good and a bad thing, depending on what side of the coin you are on, okay? Because it's either you're earning interest or you're paying interest. So keep that in mind. So with this total liability right here, with your car, say your interest is 5%. All right. So now that we have those three numbers, total amount, minimum payment, interest, now what you're basically going to do is just start paying the minimum amount. You're going to figure out all the minimum amounts, make a fund just for minimum amounts, put that amount in your account for just minimum amounts, pay that each and every month. When one of them is finally paid off, you'll keep that same amount going in there, and you allow that to roll over to or break up into your other accounts to where you can pay off the next thing. This is a debt snowball effect of paying off your liabilities. Later on, we can teach you about velocity banking to where you can pay off things in chunks, or you can simply just look it up on YouTube. But that is a way you can become debt free. At the same time, we're going to jump over to the right side, which is the wealth creation fund. And remember, this is that left side is only 70% of your money just working for you. It's taking care of everything. All right. There's hardly no cash flow on that left side of that column right there. So there's no wiggle room for fun or anything like that, because we want to put majority of that money into your wealth creation fund to where we're going to show you where you can use your extra cash flow and really leverage it to help do fun things in your life. So the first thing we're going to do is break up 10% of that 30% into pay yourself first. All right. That means 20% will go into the investment money. 10% will break up into your pay yourself first, which is amazing. And then we're going to have an emergency fund. That means cash you can get to immediately, right? A lot of people go back and forth between, have the 3 to 6 months of emergency fund. I want to make this a lot more easier and a lot more fun for you. So that way your money can last longer, because we're creating a wealth creation fund. And no, this is the money is math formula. So the emergency fund will be 1 month's worth of your total expenses and liabilities amount. All right. That would be your emergency fund. That means you will have 30 days. If something should happen to your source of income, you have 30 days to get it together. All right. We want to set this time limit and make it quick, so that way you don't take too long of missing out on these other things I'm about to go over in a second. All right. Once you have that 1 month of savings right there, the rest of that 10% will go into becoming your own bank. What is that? That is basically a whole life cash value life insurance, right? What you want to do with that is not only are you protecting your future, just in case something should happen to you, because we're not always promised tomorrow, you're going to be allowing yourself to have a cash value that you can borrow from later on, and then you can simply pay yourself back. Instead of you borrowing the money from a bank, you borrow the money from yourself. So say that you get your become your own bank up to that $20,000. Remember, on the left side, you have your minimum payment and your interest rate and that total amount. But with the become your own bank, you will have owned the car straight up, and now you're simply paying yourself back and you're earning interest by paying yourself back. So remember earlier, I said either you're paying interest or you're earning interest. So now when you're making those payments to yourself, you're putting the money back into your account and you're allowing your money to multiply. Because the great thing about becoming your own bank is you're able to earn compound interest. That is very important. Compound interest to where your money is still compounding over time. Okay. That's just the first part of the wealth creation. That is 30% of your money, 10% of your money right there of that 30% is going into that to help build that, to help fund your lifestyle now. So that way you don't owe nobody else. You will simply control everything and pay yourself back first. That is the great thing about becoming your own bank. Now, that other 20%, I highly, highly recommend you stick it into something that is going to build an asset account. Earlier, we talked about the profits over wages. This is how you can really have the profits take care of your wages. A great thing that I like is index funds. You can get an index fund and say you get the S&P 500, the VOO, right? It's on average, it says it earns anywhere from 6 to 10% a year. All right. So let's just show you how these percentages can work for you. 6 to 10% a year. If you can find a way to get $1 million into an index fund, that means every year it will pay you anything from $60 to $100,000 a year. You can able to take out those profits and then live off of that. Remember that financial piece? That is anywhere from what, $5,000 a month to $8,000 a month. You can live off of that profits and you still have the $1 million in the fund. All right. Or you can invest most of that money into a home-based business. But I always suggest that you start off with stocks, because when you learn how the stocks work, when you really get into how the stock market works, it will teach you how to own businesses. But you got to understand the structure of business. And once you can understand the structure of a business, then you're able to create your own business. All right. So by having a home business, you're able to have a tax write-off, which is incredible because now you're able to have even more lucrative money for each of these personal things. All right. So by you having a home-based business, that is a way you can avoid a lot of taxes that will put more money into your account. Okay. So that is the money is math formula. That is it, y'all. Now, if you want like to learn more, here's a summary of everything we went over. All right. The objective was what will allow you to buy back your time or buy you more dignity. By having money, you're able to have more time. You don't have to be at that work. You don't have to go do that service and get that commission. You would be able to have dignity. Imagine you can walk into a restaurant, a clinic, any kind of place of buying something, and you can buy whatever you want. What would that do for your dignity? Right? It's incredible. All right. So the action item for doing this is, first off, you're going to complete your budget. Then you're going to automate your money in percentages, and you're going to know your numbers. Because when you know your numbers, then you can be able to do more things later on. All right. And in the process of investing yourself, you started a wealth creation fund, you have some index funds going, and you have a home based business to reduce the taxes that you pay. All right. So, if you like all this information and you want to start implementing this, I say go ahead and start right now. Go make it happen. But if you want to learn how, now that you know the whys and the how, if you want to know, now that we have went over the whys you should do it and how you can kind of do it, now we can break it down to even more. So you can join the Invest in Yourself University. You simply go to investinyourself.com. You would pay a one-time fee to join my university, where I'm always updating this information with even more topics, more tricks, everything like that, and giving that value to you. Every time I go to a conference or invest in myself, I give it back to the people in that course. Okay. So go to investinyourself.com, get signed up, pay for the course, start watching the videos. I break this down even more. I even do one-on-one coaching in there to help you out to dive down in your numbers. So I would love to have you join. Now, if you want some experts to help you with these numbers, and you can learn how to really get a financial makeover, you want to learn how to reduce your taxes, you want an expert to actually write up to take your W-2, help you write amount what taxes you need to pay. So, and by you owning a home-based business, they can help you with that. If you need help getting your credit score together, they can help you with that. You need help setting up a become your own bank or a private reserve account, they can help you with that. If you want to learn how to buy land and be like a land banking, they can help you with that. They can help you get your financial makeover completed. Just go to investinmwr.com. All right, that's all I got for y'all. I appreciate y'all taking the time out to listen to this video. Share it with somebody else. Keep watching. Go get started at investinyourself.com so you can keep learning. Follow me on TikTok. I drop a lot of videos on a day-to-day basis, just explaining tips here and there, and just helping people overall. I love what I do, and I love y'all. Y'all go out there and continue to invest in yourself, and I hope that I meet you one day. Peace.